Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of The Options Playbook, and I will be your host for the next 25 minutes here on Options Guide TV. My voice is a little harsh, just, rooting for Netflix to continue on up. I feel really sad that they did not get the deal. So the stock has popped. So that was a good call inside the portfolio. We were long calls, switched it out, and we bought long stock. So I know this is an option trading show, but because of the volatility that was created over the Warner Brothers deal, we just wanted to be long Netflix, but we didn't know how long we'd have to wait for that trade to play out. So in the Netflix position right now, we see Netflix up and it's rocking and rolling. We're already up. Well, I'll just highlight it here. We're already up 18% on that position, and that's our stock position that's in the account. Also, our gold trade is doing well. So let me add to the paper trading watch list over here. We're going to add Netflix and the gold trade we need to look at today. Netflix is up another 8% on top of it. So the headwinds are gone. They're not worried about them saddling themselves with debt, but Netflix had plenty of money. They could have easily done the deal easier than Paramount. Paramount actually had to take some Saudi funds in order to do it. I think the total deal was 71 billion, and about 30 billion of that is going to come from the Saudis and the national sovereignty funds. So Saudis are going to own Disney at this point in time, is kind of what it looks like. The big asset from Warner Brothers is Disney, and they're going to own the whole thing, though. They're going to have access to Netflix. Did not want the television portion of it. They did not want to deal with CBS in that, but the Paramount deal is the whole package. So a lot to still happen on that end, but that freed Netflix up. And I still think Netflix is a buy at this point in time. And we got 100 shares of Netflix in the account. Now that those headwinds are out of the way, I wouldn't mind adding to our position. So I told you that inside my own account, I owned Netflix for a long time. I wrote it all the way down. I didn't get out after the downturn, after their announcement that they're trying to buy Warner Brothers. And as a matter of fact, I doubled up and I ended up doing exactly what we did in our paper trading portfolio, in that I bought a deep in the money call option as opposed to going out and buying, let's say, an additional 100 shares of stock. I own a few more than that, but let's just make it on a 100-share basis, just like we did in our portfolio. And in that position, I decided that I don't want time decay to happen. I didn't want to sell calls against the position because I also didn't want to get blindsided by it. We did sell a Netflix call inside our portfolio, but the more I sat and started to think about what's going on with Netflix, I'm like, the easiest position, considering that it's a $77 stock, you can easily buy 100. Well, not easily. I mean, but 100 shares is $7,795. So it's not unfathomable to go out and buy that position. So with that said, I don't mind adding to the portfolio now that the event has happened. It's pretty, I mean, they got 4 days. I guess anything could happen. They legitimately got 4 days that they could come back and counter. But that doesn't look like it's going to happen. So let's go out and look at the Netflix position, and we're going to add to it NFLX. And we got to go back and look at our gold position too, because that's looking good right now. So here's the Netflix trade. And if you have any questions in that, and I see some people already jumping into the chat box, we were having some problems getting the stream over to my X account in order to the Tradier X account. But now everything is up and running. So if you are partaking in X.com, that's great. YouTube, hub.tradier.com, that's the preferred method. That's where Tradier would like you to go and sign up and build a profile. But all the speakers are conglomerated inside the hub. So very easy access to all the speakers. The sign up is free if you want to take your time to go in and do that. But please do opine inside the chat box right now. And hello, Kurt. Nice to have you back. Oh, he was away. Well, thank you, Kurt. Next time you need to let us know before you leave. French Prince, happy Friday. Yeah, it is Friday, isn't it? That's usually the day after Thursday. So yeah, wonderful Friday. Happy Friday to everybody out there. Happy Friday to Netflix, up 10% on the day. So let's buy the deep in the money call option. And I might actually do this, even though I did end up buying more stock. I'm going to think about doing this in my own account. Maybe let it give it. I mean, we could possibly wait till Monday, let the euphoria play out and see if we get a little bit of a pullback. But, well, let's go look at the chart. Okay, let's look at the chart. Because Netflix is always sold at a high valuation. And I mean, I remember 15 years ago, people saying that Netflix has to sell off because it's such a high valuation. And it just never did. You know, the stock has just gone straight up forever. It feels like. So inside the Netflix trade, we're going to go. Let's see if we can go back 2,000 days inside here. We had to run up, back down, made it all the way back. Here's our breakout right here. And then on top of it, you know, there's not a lot of people that are as worried about the AI. I saw one analyst come up and say, well, Netflix is going to have to deal with the fact that making content might become easier with AI. And to me, I didn't understand that statement because Netflix spends a lot of money making content. So don't you think that they're going to figure out that they can reduce their costs by making AI content? I mean, you could say, well, maybe they'll lose some share to Google or Alphabet, but they've been dealing with Alphabet's basically free content forever. Right. And they still give premium content out. But look at the rise in the stock. It was the AI darling because they weren't spending all this money on CapEx. Now they got the money to spend because they didn't go out and buy this heavily leveraged and in trouble Warner Brothers. So they didn't spend that money. And now I think that this is feasible to get back to this level. I doubt it's going to happen as quickly. This crossover, this actually was a really, I should have probably sold when I saw this huge parabolic move to the upside. And then we had that strong move down, the 50-day crossing over the 200-day. That was almost perpendicular on the way down. So that would have been a good selling point. But now we're all the way down here. And we got the run up today. We're hanging out in this range. Let's pull our mountain in right here. 86. Okay. So this is the gap that I'm kind of focusing on over here, all the way up to there. So we're almost, yeah, we're trying to fill that gap today, aren't we? Now you got to realize where the stock is at. It's right over here at 91. The high end was here. We're at 91.90. So it looks like we came up to the top of this and kind of came back a little bit. I do know it was up 10% at one point in time. And it's basically ever since the deals, it was up after hours. The marketplace was anticipating that the deal wasn't going to happen for them, for Netflix. And so now we're up to this range. Yeah. Okay. So let's do it. Let's buy it. Let's buy it. Vol is a little high in the front month. 39 overall is historical. We're paying a little bit of vol premium relative to the historical, but the stock, we're going to be paying up a little bit on vol, but I'm still going to do it. Here we go. June 17th, 475 days away. That's way too far. How did I get to there? January went way too far. July is 140. August is 175. Let's do August. We're going to go deep in the money. And this is going to be our stock outperformer portfolio. We've got the 100 shares. We had the news event that happened, and now let's double up. Let's add to our 100 shares. We're going to have something that has something very similar to the 100 shares. But if we look at this, we're trading at 79 delta right here. But here's where the open interest is, 2,274. So 79 is where I would lean. I would look at buying this option, but I like the fact that there's more open interest here. Markets are always tough on deep in the money option contracts. 18%, $18, let's say, if we pay that inside the paper trading app, we're going to have to pay close to the $18. 18 divided by 92.26. You're talking about putting up 19% of the stock price. And I'd like it better if it was 15%, but we're going to do it anyways. I'm paying a little bit of all premium. Okay, so we're looking to buy 175 days to expiration, August 20th, 80 strike call. We're looking at a delta of about 78 on that position. Market is, we're going to have to pay at least 18. I hope it fills this at 18. We should be able to get filled at that. So we're going to send it in the paper trading app at 18. And I always feel like I have to give this disclaimer. If you're first time watching Options Guide TV, whenever we're in a paper trading app like we are right now inside the Tradier Pro software, it looks exactly like the platform. You have all the tools, you have everything available, all the bells and whistles. But you're not going to get the same type of fills that you would on a normal. You're not trading with an exchange, right? The paper trading app has rules behind it, I guess, to determine exactly what gets filled and what doesn't. But we don't have to hit the ask. A lot of times we get close and we get filled. So we're going to hit this at 18. And of course, the market moved on us. Always seems to do that. 1830. Got it. Let's go 1810. 18 is such a nice round number. Let's just send it. Boom. Order has been sent. And that always, I mean, if we could just, it seems like every single time we try to put in an order and I talk too long, the market moves on us. All right. Portfolio. Let's go in here. Walmart. Notice that we are up 40% on the trade, but more importantly, our delta is almost at 1. So we have 111 days going out to June. Let's move it to August. So let's take our profit here and we're going to roll. Okay, why isn't it letting me roll? And what we want to do is we want to go out further in time. We want to roll back down to an 80 delta, taking the profits on this position. We're down 24% on our NVIDIA position. This is going to expire worthless today, unfortunately. It was looking golden after the earnings announcement. I'm kind of surprised that we don't see kind of a dead cat bounce in NVIDIA today. I thought that we'd get a little bit of the way that it feels like people kind of piled on the NVIDIA trade. And there's really nothing to be scared about in NVIDIA. The earnings were great. Outlook was fine. I mean, maybe people are thinking that it's just too good and people can't keep up with the CapEx spend, but it doesn't look like the spend's going to end at any time right now. So I still like the NVIDIA trade. There it is. Okay. I'm just going to do it this way. I don't know why that is giving me a headache. Walmart. So much for that. Just talk about the bells and whistles, but right now I'm not getting the quotes to pop up on Walmart. I guess we'll digress. We'll try to come back to that. Maybe my internet will catch up by the end of the show. So the other trade that I wanted to look at that I also kind of think got a little bit overdone is Microsoft here. So MSFT. Kurt's asking about the zebra trade. Okay. Okay, here's Microsoft. And so we came all the way back down, kind of, and this one I do think that this has been overdone in Microsoft. So let's zoom into this area. I guess you got a little bit of room. It could come down to here, stopping point. We got a little bit of a bounce, down 5% today. Let's look at selling the 380. So let's see if we can get an options grid up for Microsoft. There. All right. Well, that worked. Okay. So on Microsoft, we're going to go out about 43 days, and I want to sell a put spread and see if we can maintain this 380 level at least on the downside. Maybe 390. We're 396. Let's look at 390. Go out 42 days. 390 is 12. 380 is 8. Yeah, that's not bad. Okay. Not as good as our gold trade. And our gold trade is looking strong too at this point in time. So we've kind of been on a roll here on Options Guide TV. Yeah, 350. I like that. Okay, so we are 6 points out of the money. What's the delta here? That's 30. We could go 15 points wide. I'll keep it simple. I personally would probably do it 15 points wide and look at the 26 delta on the downside, the 375. But I don't know. That might be a little bit too much risk for everybody on the show. So here's our paper trade that we're going to put in. We're going to sell the 390, buy the 380. We're going to bring in 350. Now, golden rule is I'd like to get in about 1/3 of the width of the spread. So that would be $3.33 on a 10-point wide spread. If it was a 5-point wide spread, we'd look at $5. So we're looking to do 350 on this trade going out. This is just a longer term trade. This is after earnings. We're not speculating on earnings. We're not looking for any type of event there. So we're just going to take Microsoft, sell the 390, buy the 380, and we're going to send this down to the trading floor. Midpoint's 375. So now I'm going to have to give up some money just to get it into the position because it won't trade at the midpoint. But you more than likely can trade in Microsoft at the midpoint if you're doing a spread. Never a guarantee. Got to always emphasize that. Still, this is still sponsored by Tradier, and always want to let you aware of the risk. But this is a very liquid underlying. So we'll go. I'll try 330. That's the price that I would want to. That's the minimum price I would want to get, and we'll send that to the floor. Okay, so those orders have been sent. Microsoft. So we got our Netflix order in. We're here. We're still at a limit. That trade is open. We got our Microsoft trade in. Butterfly. I closed the Butterfly in Home Depot today just to get it out of there. It didn't quite come all the way back, but that trade filled. Got a few dollars. Got a few. Got 20 cents. I got enough to go out to lunch. So salvaged a little bit on that order. Let's go back to the portfolio. Let's see if we can. I really want to roll Walmart today. You got a little bit. I mean, it's 95. The rule is that it would have to get close to 1, like 99 or so. And here's the concept. We bought Walmart. We had an 80 delta. If the market comes down, let's reiterate the rules, and it hits our strike, we get out of the position. And I got also, I'm thinking of that because we've been really close, 297. We've been really close on JP Morgan, and we're down about 50%. So that's a tough one there. But we did bring in so much. We sold this for $6.80, and that's trading for 29 cents. 14 days. Okay, we're going to close that one too. So here in the Walmart trade, stock comes down, it hits our strike. We're looking to get out at about 50% of what we paid for it. Normally, we get in at about 15% of the total cost to buy the stock outright. If the stock comes down and hits our strike, or if we get out at half the halfway point, then that means we're down 7-8% on the trade. We don't want it to go below the 105 level, and that's mainly because then you're selling at the money premium. Obviously, the days to expiration, I don't want to I just have general rules here. I don't want somebody to just try to quote option pricing to me in the way they work. But bottom line is I don't usually want to lose more than 7 or 8% on any of these deep in the money option contracts. That's our goal. We're only trading Monday, Wednesday, and Friday, but that's our goal. So in this instance, if it goes up, we also want to take the benefit. We want to reduce our risk and take the profit on the trade. So in the Walmart trade, the stock is up 40% at this point in time, but it's not really about that. It's the fact that we have this deep in the money option, and the deeper that it gets in the money, the bid-ask spreads have a tendency to widen, especially if they get way deep in the money because volume dries up. Well, I thought Walmart went away. Something filled. Good. We got filled on our Microsoft. Yeah, good. They gave me the fill at 330. I like 350 a lot better, but I'll take in the paper trading app. I'll take that 330 fill. Oh, that's behind my head. I'm pointing. Let me look at orders. So here it is. We filled at 330. All right, that's excellent. 350 is what I'd be shooting for if this was a real account. Just so you know, I would expect to get at least 350. I would start at 355. The midpoint right now is 358. Okay. Microsoft 330, Walmart. So let's hopefully pull up this grid. We're looking at the June 18th expiration, WMT. Dang it, I don't know why won't my quotes come up for Walmart. Caterpillar's fine, right? There's something funky going on inside the paper trading app. Let's try it this way. Oh. Send to options grid. No matter what I do, it's not working. It's giving me the quote, but it's not giving me the chains. That's very weird. Okay, I'm sure if I did the old turn it off, turn it back on, it would work just fine. I guess we're rolling on Monday. Let's hope that we stay up today and we get that opportunity to roll on Monday. Okay? We're not going to be able to do the Walmart trade. Okay, what other trades did I like? We're at 1124. The one trade that's working out really well is gold. So this option contract is in the money. Another nice feature of the portfolio. It's showing you, and I highlighted this, that it's separating out the different expirations. So it's not grouping everything together, which is nice. And then this is the trade that this was the official paper trade. We sold a short put spread, hoping that gold would continue on up and that it would stay above the 476 level. Went 10 points wide. And we were able to bring in $4, over $4. Even inside here, we were able to do it for like 450 or something ridiculous. And on a 10-point wide spread, that was a great, you had a 450 net credit on a 10-point wide trade, just really solid. Now, part of that is that this is the probability of it hitting 466 is a little bit higher because you got a $400 stock. Okay. But so that trade is doing well right now. And let's look at, let's see if we can get this order down there. So let's go to the options grid. See if GLD, okay, GLD is working. That's great. Portfolio, March 6th, 480, 485, 487, 480. Look at all the open interest there. Holy cow. On the 485s. Okay, 480. Buy. 485. sell 2. And 487 buy. So we're 160. We don't have a huge, can't remember exactly what we paid for it. We're up a little bit, but we're in the right direction. So we got 7 days remaining to that expiration. We are at 482.46. If we hit 485, this is where we'd want an alert. If we get to 485, we can ride it. Let time decay work for us. The most that it could trade for is $5. If it starts drifting higher at this point in time, we don't have to worry about that, because remember, above 487, we're still profitable on the trade. So we're going to send this to the what if calculator. And this would be the range that we'd be hanging out in. So if we get above this at 485, it's okay to hang out and see if we get some time decay and see if we'll come back and land at this area. But if we're hanging out in this range next week and we can't quite get to that 485, we're going to want to take some profits. So we're looking to add to the fact that we are profitable on our short spread that we brought in $4.50 for, got a solid net credit for that trade. And now we're hoping that we get up towards the 485 level here and, look good on that trade. All right, I see a few questions, so let me address those. But I do like I like the gold trade when we put it on and it is working out for us. Berkshire, we're deep in the money. 500 is the midpoint there. We're flat on that position. CME, we should be up on this one. 290, stocks at 317. Yep, we got 21 days remaining on that. So this trade's looking really good. Probably look to close. Should be up on that. Okay, so let's go in. And I think we tried to do this on JP Morgan. We tried to close this short one before, and it must not have gotten executed in our paper trading platform. There it is. Okay, so let's try this one more time. Okay, so that's in there. And we're just going to do this. Let's say 3. Let's go let's just get this out of here. Let's go 32. All right, we're going to midpoint's 26, 38. I would try to work it a little bit. I don't want to pay 38 for it, but we're going to put it in at 32 and see if we get filled in the paper trading app. Here we go. And lastly, let's look at Walmart. Man, we did a lot of cleanup today. A lot of cleanup. So it let me send the Walmart order, but it's not letting me roll. I'm kind of just annoyed that I can't get into the chain. God, that annoys me. All right. All right. I'm letting it go. I'm done. All right, Kurt, what are your questions? Let's check them out. Go ahead and toss in the Zebra comment, if you will. Do you like Zebra trade as a stock substitute? Buy 275 deltas and sell 1 at the money delta for close to 100 delta position versus just a long. And is that the symbol? What's the symbol for Zebra? I don't know the symbol off the top of my head. I don't know if I like that, Kurt. Mainly because if you're trading this on stocks that are as liquid, deep in the money options really get wide. ZBRA. ZBRA. Let's look at some open interest on it. Let's see how wide the market gets. I mean, it's bad enough trying to trade it in stuff like Microsoft and Nvidia, let alone. So it's down. Man, that stock's Zebra's really gotten beaten up recently. Year to date, it's down 9% year to date. 1 year, it's down 27. Zebra, we're going to go deep in the money. All right, I'll look at it. Kurt, let's take a quick peek, okay? Thumbs up on the Cokes trade, okay? Zebra, how far out? Okay, so you would be looking, yeah, they don't. You're looking at August. Markets are, yeah, 6 points wide. See, it's just not there. 57 by 51. The delta, you got zero open interest on anything. The only thing that's got open interest is 40, is this one right here. No, I would buy the stock. I would buy the stock. It is expensive though. $22,561. Yeah. Yeah. Oh, I thought you were looking at the stock. Zebra Technologies. All right, go ahead and put this out. It's an acronym for Zero Extrinsic Strategy. Is that my strategy? Did you name my strategy, Kurt? Because I've never called it that. That maybe is there a different options analyst that uses that acronym? Okay, so now that's different. I'm looking at that totally different. I'm setting this one in. So you buy 270. Let's go ahead and throw that one back out there. Do you like the Zebra strategy? Buy 275 deltas and sell one at the money. Buy 275 delta options and then sell one for close to 100 delta versus just long in the money. Okay, so you're looking at the total position delta. So if we look in this portfolio here, the total position delta is highlighted over in this corner. And so like in this instance, it's saying, well, Netflix, the delta is 1 because you have 100 shares of stock. Walmart, the delta is 1.92 on a position basis. $192 if we go up 1. That's how much this makes. I haven't thought about it, Kurt. Oh, that's Tasty Trade? All right. All right. I haven't thought of it. I haven't thought about the Zebra trade. So you get the movement on the upside. You're going to get pegged. I don't like positions that where I got to deal with that assignment, right? Because I don't own the stock. So I'm going to have to do something with that option. You'd have to be very active with the short option contract. Yeah, that would be, I don't know. I just don't like dealing with the short option. So you're at that stage, if you did that, you would have it would act like 100 shares of stock in theory to start with. And if it went up, you would get more shares of stock. And if it went down, you'd get less shares of stock. So you're synthetically long. Why not? Yeah, I mean, yeah, that's not bad. It's okay, but you got to deal with you're pegged on that option contract. and you got the potential assignment of being short that option. So you'd have to watch and make sure you don't get assigned. And are you selling the same expiration? I'm assuming you're selling. If you're selling the at the money, you're selling the same expiration, right? You're selling the if you're going out to August, you're selling the August at the money expiration. And go ahead. Okay, that sounds good. We'll leave it at that. Yeah, all the same expiration. All right, that's enough. I digress. It's 136. Go ahead. The Coke trade worked out. That's awesome to hear. And it's just a stock substitute. That's true, Kurt. That's true. It is. You got a long term to expiration. So I guess I'm okay with it. I'll have to look at it a little bit more. Maybe we do one. Maybe we do one, Kurt. Maybe we figure one out and we do one. And we'll see how that happens. All right. And we'll trade that. That's it. That's it. What did we our Netflix trade needs to get filled. So I guess our official paper trade today, I would say, is the Netflix trade. This we're gonna just do this one at market. Let's replace that. Why won't it fill me? All right, we'll give you your penny. There you go. Okay, fill that one. JP Morgan got rid of the short call. Now we can deal with the long stock position. Netflix needs to get filled. It did it to us again. It was $18. You guys saw it. Man, why do these positions move so hard against us during the show? Need to start front running the trades and ahead of the show. I guess we're paying 19. Man, that stinks. 18. I mean, that was a whole dollar that we got to give up now. I'll try 1880. A lot of eights. Let's do that. Okay. That's it. Thanks for coming, everyone. We'll see you on Monday for the next edition of Options Guy TV. If you haven't done so, please go to a hub and set up a profile so you have access to all the great speakers that Tradier sponsors. I'm all very thankful for them. And, if you want to get a little nutty, maybe go in and open up an account at Tradier and check out the Tradier Pro and all the features that are along with it. The paper trading app is available. It's obviously every once in a while you're going to get a little bit of a glitch like I ran into with Walmart today, but it's a beautiful app. Access to all the quotes, everything across the board. So feel free to check it out. And thanks for stopping in. We'll see you Monday, 11 a.m. Eastern time for the next edition of Options Guy TV.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.